Hey guys, in today's video we're going to take a look at some future predictions for both the euro dollar and the pound dollar, and today's idea actually comes from you guys. I got a question under a YouTube video this past week that said, Akil, I really like the way you look at the markets. I've heard you talking about 96 for a while now on the euro dollar, and you explained that very clearly. It'll be interesting to see what happens from here. If it breaks lower from here, what's next? All the way down to 84-ish or lower, maybe a bounce back up to 105s. I'd love to hear about it. Also, how about the pound dollar? That thing is out in empty space now. So what are you looking for there? And if you guys are brand new to the weekend video, this is what I want to do. I want to serve you guys. I want to be able to answer the questions and give you something that is helpful in your preparation for the week ahead, and hopefully some helpful tips that help you along your overall trading journey as well. So never feel shy about leaving a comment. If you're brand new, hit that subscribe button. That way you view all the videos that come on this website. And if you're here for a while, if you've been here for a while, hit that like button and show your support. So before we start our future analysis here on the euro dollar, let's talk about why we looked at the 96 level in the first place. This was a very nice level of consolidation from a long time ago, right? Back in 2001, 2002, this area right in here. And what we had is we had a nice little ice zone, a nice little structure swap zone where price action had hit a previous level of structure multiple times, right? If you look at the horizontal line I just drew in, you're going to see previous structure support. After it's broken, turns resistance, tested again as resistance, broken, and then tested as support. And that's right around 96s. I drew it a little bit loose here just for example purposes, but hopefully that explains what we were looking for. Now that we violated that level, the question is, where are we likely to go to next? And for me, I always default to the next level of structure, at least for my starting point. So I'm going to take this horizontal line, right? And this is one of my favorite tools. I don't even know if you call it a tool, favorite charting tools to use, because, well, if you believe in support and resistance, the power of structure, you can make some pretty accurate predictions just by having the ability to identify what levels of structure are key. And you'll notice that the market often stops there. It doesn't always reverse there. You need to add a few more things to that as well. But you can get pretty accurate with your predictions if you just can identify structure. And that's more than half the battle in trading. So we have our next level of structure identified right here, this inside level of structure. And again, an even further one would be down here. This is near the 84s or 85s that the trader spoke about. But we'll focus on this top level first. And let's kind of snap back to reality, go all the way back here. And we'll see that, hey, we have room for expansion to the downside. So yes, we are getting a little bit of relief here. We had some interesting news come out across the board in the market, but for the dollar to this past week about kind of the future in our interest rate hikes, what we're going to do in November, what we're going to do in December. A lot of FOMC members spoke. But I do think overall the dollar is still stronger than the euro when it comes to a fundamental perspective. And obviously on the chart here, we have a bearish technical bias as well. So don't let this little bit of relief fool you. There is still room to the downside. Now, speaking of relief and speaking of structure, something that we do when we look for periods of relief is I look for that relief to really go to the next level of structure. And if you're familiar with how to read a trend, right, I'm going to draw out some basic lines of just drawing the ebbs and flows, right, the swing lows and swing highs, the extensions, the retracements, the stuff we talk about in our very first, or I guess second course here on at Tier 1 trading, right? Again, you can identify these key levels of structure that stand out, and you can make some pretty accurate predictions on where price is likely to go next. You can see we've just come up to one or a little bit below one, but these things all work in zones. So we have our relief, we have our retracement. If we go one more time frame down, we get a little clearer picture, right? You can see a previous structure support shelf right here, which is going to act as resistance, or which we'd expect to act as resistance. We have a smaller one right here. And what we've done here is we've come down. We've retested the lows, right? We violated this little relief right here, and we've put in what's called a complex pullback or an AB equals CD pattern, right? So this is part of the process where it's called kind of building a case, right? I told you earlier, you know, one thing in the market really doesn't give you much information, but when you can put a bunch of things together, it becomes more powerful. So not only do we have a previous level of structure right here, we have an AB equals CD pattern. If we want to take our Fibonacci extension tool out from the swing low to the swing high of the A to B leg, we're going to have a 127 around that area, a 1, 4, and 4. It's not shown, but right here in the middle. We can also take a Fibonacci retracement from our swing high right here to swing low. We have a 50% retracement. If we take it from this lower swing, we'll have a 618. So we have a lot of things lining up at once between Fibonacci extensions, Fibonacci retracements, harmonic moves, AB equals CD patterns, and no doubt, or no surprise, I should say, the market start to stall at this level a little bit. So if you're someone that's looking for an aggressive entry, or maybe not an aggressive entry, that's already happened. If you're someone that's looking for an entry reason, if we go down to the hourly, we have one more thing that has occurred as well, and this is going to be called a 2618. So a lot of you guys are familiar with double tops, right? Price action, I'm going to delete this just to make the chart clear. Price action comes up, right? We get a little bit of retracement. We come up to test the previous highs for the second time, and we hold, right? Nice little double top right here. Well, think of a 2618 as a secondary opportunity at getting involved in a double top. So once we violate the lows of the double top, which confirms it, then you look for the retracement back to the 618 retracement. And there's different ways you can do it. You don't have to do it to the 618. You can kind of do whatever you want just to kind of keep things simple for the YouTube version here. But you look for a move back to the 618 retracement. Nice little hold here. And then you use that as your entry to get short. So you can see that's already happened. You may be there at the open, or you may have a chance at another entry opportunity. But yeah, definitely still looking for shorts on the euro dollar. I think there is still room. I think we saw a little bit of relief again with the Fed members speaking. But I think we can certainly push down to, what was that level, 92s? Sorry, I forgot it already. Not 85 necessarily, but I think it was 92s. Forgive me, I do this live, so this is not pre-rehearsed or anything like that. Right in here, yeah, 93s, 92s for euro dollar. So the next question came on the pound dollar, and the question was, how about the cable? That thing is in empty space right now, so what are we looking for there? And the first thing that I said when I responded to the trader is that, are we in empty space? And this is where having that higher time frame perspective pays off. And for me personally, the daily is typically my higher time frame in my trading, right? Daily, 4-hour hourly is my normal routine. But sometimes when you have big moves, you need to go out to higher time frames to gain perspective. Because if we're simply looking here on the daily, right, all we see is a bearish sell-off, right? We see we're in the middle of no man's land, nothing is here, we're thinking all-time lows, and that's going to give us a false perspective of the market. So zoom out to a weekly, zoom out to a monthly, whatever you need, and you'll see that we actually aren't in no man's land, right? We are actually at a previous structure low right here from 1985, my birthday year, and I just aged myself for you guys. And you see we came down to that lows, and we put in a very similar movement right here where we've spiked and we've held. So unlike the euro dollar, where I do think there is room to the downside, from a technical perspective, I don't believe the same about the pound dollar. From a fundamental perspective, yes, because if you've been paying attention to the Bank of England stuff that's been coming out, band-aids that won't last long. But I'm a technical trader. I have to trust what I see on the technical side of things first and foremost. And until we violate that level, I can't predict a move downward. So what I would expect is a little bit of consolidation. I don't necessarily expect any type of relief. Again, I don't think the pound is stronger than the dollar, but perhaps a little bit of consolidation. You can see we've got a little bit of relief already. Now, one of the things I'm looking at when we see consolidation, I'm going to bring over my NinjaTrader chart real quick to make it a little bit easier, is a potential advanced pattern formation. And that's what we've almost completed here on the pound dollar, right? If we take out this right here, we look at this is our starting point, right? This move down, it's going to be our X to A. This first move up is going to be our A to B. Our second retracement here, our failed extension, I guess, to the downside is going to be our B to C. And then we're looking for a decompletion right at our 886 Fibonacci retracement taken from the X to the A leg, which is going to be right at 112.49. As you can see, we almost got there. But this is called a bearish bat pattern. What you're looking for in this bat pattern is a move from our entry point right here, at least down to our initial target area, which is going to be right there. And typically these advanced pattern formations form a lot during periods of consolidation. I do expect a period of consolidation here. I do have, again, a more bearish bias. I don't have necessarily a long-term bearish bias as far as an extension goes, but I do have a bearish bias. So this one actually lines up in the same direction as the bias. Now, if you are someone that has a longer-term bearish bias, you're saying, hey, forget about those 1985 lows, we're going to blast right through them. Well, this is going to help you as well, because what you can do is just use this pattern formation as an entry reason into your continuation trade. This is really no different than what we saw on the euro dollar, again, where we had the extension down, a new structure low. We had a complex pullback, right, in the form of an AB equals CD pattern or equal measure move. And then this is your entry reason. The advanced pattern formation could be your entry reason into getting short with for a move back down here. So keep that in mind on the pound. Hope these two ideas help your analysis. And remember, we've got a 14-day trial available over at our website, www.tier1trading.com. So if you want to work with me and Jason Greystone and a great community of traders on a daily basis, take advantage of that opportunity. www.tier1trading.com, 14-day risk-free trial membership. No auto bill, no sneaky sales stuff. Just get on the platform and learn.